Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was February 2022. So the latest hedonic home value index numbers from our friends at CoreLogic show that the top three growth capitals for the month were Brisbane, Adelaide and Hobart. Now it's interesting to see here that Sydney prices actually slipped into negative territory for the first time since October 2020, but it's only down 0.1%, so don't go selling your property just yet, folks. I also have no doubt that this will spark a flurry of news stories about the imminent doom of the Sydney market, but I can assure you, with the history that these news articles have on predicting the market, there's nothing to worry about. Okay, one thing that I can say is that with prices so high in our two largest capital cities of both Melbourne and Sydney, it's no wonder that we're starting to see money being drawn out from those two capitals and going into some of the other capital cities. Now, that's probably because they're providing a much more attractive return, price points are a little bit lower, distance from CBD is a bit closer. Remember, the investment dollar is portable, and we do see this happen during the property cycle. Now, if we look at houses versus units, no big changes here. Houses still outperforming units, but again, you know, from an investment perspective, it totally depends on your goals. I mean, capital growth versus rental yield, depreciation benefits. Just remember, it's location, location, location. If you're buying a unit, good location. If you're buying a house, good location. It's all about location. Now, we had a wild ride in 2021, so what's ahead for 2022? From our experience, 2022 should see the return of a more balanced market conditions. We expect that property values will continue to rise, but at a more sustainable rate. So while many factors affect property values, some of the main drivers of property price growth are consumer confidence, low interest rates, economic growth, and a favorable supply and demand ratio. So you can see from the chart here that listings for sale are 32% below their 5-year average. And remember that Australia's population has grown by over 2 million people in the last 5 years. So supply is tight, especially for investment grade property. As always, there are markets within markets in real estate around Australia, but in general, property values should increase throughout 2022, but probably at a slower rate than we saw in 2021. At a macro level, we expect to see steadier gains of about 5 to 8% in 2022. Many regional markets are also likely to deliver solid growth during that period. Houses in lifestyle areas, houses with high land value components are expected to see strong demand and capital growth, both in the short and long term. Some regional housing markets have been delivering unsustainably high rates of capital growth and are therefore likely to deliver only, modest annual capital growth from this point in the cycle onwards. So overall, more balanced market conditions, which is a good condition or environment for new buyers to be in. One of the other things that I wanted to add to this is that an interesting thing that I'm seeing here is the correlation between the annual change in total advertised supply and those with the largest decreases in supply have also seen the highest increases in price. And this is just the law of supply and demand in practice right in front of your eyes. It's actually quite beautiful to see. Now, there's a lot of opinion in the media about what's going to happen to the property market. And I wanted to give you kind of our news flash about that market. So I went through some of these in our last video, but I wanted to use some of the charts from the latest RBA chart pack to illustrate some of those points. So the population growth is the main catalyst to capital growth, supply and demand. So Australia reopened its international borders on Monday, the 21st of February. Now, Australia's jobless rate is at a 13-year low. Okay, the RBA will not make any changes to rates until they see a long data set of improved wage growth. So this data won't probably be ready until August. APRA is still holding off from making any changes to lending policies, so we shouldn't see that dropping anytime soon. Australians are definitely richer since the pandemic. There's an additional $321 billion in the Australian economy since the start of that pandemic. And lowering yields of cash rates are definitely going to encourage investment into higher returning assets like property that we can see there as well. Let our professional buyers agents help you. For almost 2 decades, Providence has helped Aussies locate, assess, and negotiate their ideal home or investment property Australia-wide. So stop procrastinating and contact us today. I did some numbers the other day. Last year in Sydney alone, the property market increased by over $27,000 per month. In Brisbane, $17,000 per month. In Melbourne, $10,000 per month. So I don't know how much you're saving, but procrastinating isn't really going to help. So you need to make sure you make a plan, stick to it, and get a partner that can help you action that plan and deliver on those results. If you like what you're seeing here and you want to be kept in the loop with what's going on in the Australian property market, make sure you click that subscribe button and you hit that like button as well for us. I want to thank you for your time today and look forward to seeing you next month.